Bankless Nation, happy 4th Friday of October. This is the Friday before Halloween. What time is it?
Oh, Ryan, it's the Bankless Friday weekly roll-up, where we cover the entire weekly news in crypto, which is always an ambitious endeavor. Yet this week, while we're persevering into the frontier, we're doing it in spooky fashion.
In spooky fashion. This is as is tradition on Bankless, at least we did this last year. Neither David nor myself have seen each other's costumes yet.
Yeah, correct.
We dressed up in costume for this roll-up. Now, I have not seen what this man looks like. He has not seen what I look like. He says his costume is kind of dressed up, but in a few moments, we're going to do the reveal. We're going to turn the camera on and see how spooky you really are, David. Can you tell me about your costume? What kind of prep work went into this?
I'll tease a little bit right now. You, Ryan, actually are not going to see my costume.
What?
Yeah. Uh-huh.
Okay.
And that will be obvious to you when I turn on my camera.
What's your costume inspired by?
Oh, it's an NFT. It's my favorite NFT.
It's your favorite NFT.
Yeah. Uh-huh.
You're not a dick butt, are you? That's gonna start with crypto. That'd be so weird, dude. I'm glad I'm not having to see that if that's what you are. So my costume was inspired by some recent events. That's all I'll say.
I fucking know. I know.
No,
you
don't.
I know
you ready?
You are.
On the count of three. Let's praise start video. 1, 2, 3. What's up, David? It's me.
Oh my
Your
God.
favorite crypto YouTube influencer. This looks like some kind of a bondage thing we're about to do here.
No,
this is weird.
I've got one of these weird green spandex suits on, but what you're not seeing is I am a green screen. And so Luke is going to put my crypto dick butt over me.
No, he's not.
Yes. So you actually can't see my costume because you just see the green screen.
Oh my God, dude. This is weird.
I'm proud of you for figuring out your background.
This background?
Oh, wait, you just put that into Zoom.
Yeah, that's just in Zoom. It's easy.
Okay.
It's easy. Screenshot of BitBoy, done.
Oh my God.
Excuse me. I revealed. Inspired by a crypto influencer. That's all I'll say.
Yeah.
This is not about an individual at all. But notice I'm not wearing glasses.
You're not
for the rest
wearing
of this
glasses.
episode.
Glasses are absent.
No glasses, man.
No glasses.
Dude, well, should we do this? You ready?
I have no idea how Luke is going to layer on my crypto dick butt onto my green screen spandex suit.
I actually have no idea how you're supposed to see. Are those
Yeah, I had to cut
out
out little eye holes for be able to do this. Let me tell you, I'm going to be extremely frustrated 1 hour into this weekly roll-up. I'm already ready to get this thing off.
It's going to be super hot, sweaty. The grossest roll-up ever. I can't smile, by the way, because every time I do, it chased my beard.
Yeah. This is why you don't have a beard IRL.
Be somber. No, yeah, that's the reason. That's the reason why I don't have a beard. It's too... That's the reason. Okay, topics of the week. David, let's give the people what they really want. They're not here for the costumes.
Yes,
They're here for the content, all right? They're here for the not financial advice part of Bankless. Number one, we got to talk about ETH being almost deflationary. This is so weird. I can't see your facial reaction, so I'm just going with it. Number two, Apple is being real sketchy with NFTs, David. It seems like they want to sterilize them. It's kind of weird. And what else we got, David?
And Lord of the Rings NFTs. We're gonna see how that lands with the community. Do you think, Ryan, Lord of the Rings fans are also NFT enjoyers?
I think there's a high overlap there, but I almost want to buy one, but I'm not going to, and we'll talk about why when we get to that section. Yeah. But before we get in, got to talk about our super serious friends and sponsors. This is a serious tool that you want to use.
Super
it is called
on this very
Push.
Serious day.
The Push application. So what this does is it reads on-chain data and alerts you to events. So there's all sorts of things if you're a crypto native that you have to remember to do, right? When does your collateral go underwater, for instance, or is your buy set for a specific price point? Or is your ENS name about to renew? Rather than having to write these in a calendar or something, you need to be alerted for these on-chain events, and that is exactly what Push does. What are we looking at on screen here?
Oh, we're just looking at all the various notifications that you could be notified by. So snapshot votes, of course, MakerDAO governance decisions, rect the dark web of DeFi journalism whenever they release an article. But you could imagine so much more as the world of the metaverse gets built out that you might need to be notified about what's going on in the metaverse. Part of the metaverse is that it is persistent, as in it goes on whether you are in it or not. And so Push can notify you by sending push notifications right to where you see them, which is your phone. And so you can either sign up for Push as a push notification receiver or as a push notification pusher, regardless of whether you're on the receiving or giving end of Push. So check out the link in the show notes.
All right, guys. Yeah,
Ryan, you just are cracking up this whole entire time. Huh?
No,
you just can't have the smile off your face.
I'm just subscribing. All right. I'm just subscribing to all these opt-ins things in Push right now. David, your voice sounds a little muffled. And if it does, Bankless listeners, that's because David is literally wearing a spandex mask over his mouth. You probably can't see that.
There's no body.
There's no body.
I have to also move the microphone so it's not in front of my body so that the green screen.
Microphone? All right, let's get into the markets, David. It was a good week.
It was a good week.
What is Bitcoin price looking at right now?
Bitcoin started the week at $19,250. It went up 7% to $20,600. Very impressive, 7%. Well done, Bitcoin. We love it.
That's super impressive. We're going to talk about why maybe in a minute. How about ETH? What's that doing for us?
ETH went up 19.2%.
What?
19.2%. You don't get those very often. Started the week at $1,300, ending the week where we are right now at $1,550. So fantastic week for ETH.
Almost a 20% up week. That's big. And I'm wondering if this is kind of the like less supply on the market, taking shape, in that it's like when it goes up, it shoots
goes up
in
bigly.
a hurry.
That was my take as well. I don't know if we're ever going to be able to say that this is because of the burn, like with 100% level of confidence.
Sure.
But we were saying it before that when Ether does go up, it's going to go up more aggressively because of the supply restriction out of EIP 1559 and the proof of stake merge. Yeah.
All we need is like crypto YouTuber confidence. That's all we need. So yeah, 100%.
100%. 10,000% because of
we are fighting for you. Okay, this is not about us. We are fighting for you. I hope you guys understand this.
It's not about the money for me.
Let's talk about the single largest liquidation event in FTX history. And the runner-up isn't even close. That happened last week, a $600 million liquidation event. That's because people weren't ready for this big leg up. What are we looking at here, David?
Yeah, we're looking at the crypto prices. We're also looking at, on the bottom here, the aggregation liquidations of all the global average of liquidations. And there is just this massive green candle implying massive liquidations. And so a lot of bears were shorting crypto, shorting Ether, shorting Bitcoin. And when those prices went up a little bit, we saw a cascading liquidation to the upside, the way that we like it to go. And so there was a short squeeze. So a big short squeeze to the tune of $600 million of shorts liquidated. And that's why crypto prices moved so violently. Too many people were bearish.
Can you tell me why you would do like you're a brave man. You're a brave individual, David, but like would you ever have the balls to like short crypto?
I would never ever short anything. Even Terra Luna while it was going down, I was like I could short
this thing's going to collapse.
But like no, like crypto is so irrational, it doesn't make any sense to short.
Well, I think some traders learned that. And it wasn't just the 600 million on FTX. It was crypto traders hit by 1.2 billion worth of short liquidations. And that was earlier this week. So a pretty harsh lesson. This is the reason you don't go margin and you never short crypto. Of course, not financial advice, life advice. ETH Bitcoin on the ratio. That's got to have a good week. What are we looking at here?
Yeah, ETH is up 11.5% versus Bitcoin. We are coming into the tune of 0.0753. That ratio
0.0753. How's your ratio bet holding up, David?
Well, it was red before this week, and now it's green.
Nice. Yeah. Good to be green.
I definitely could have opened that trade at a more opportunity, but over the long term, I just don't care.
It's kind of funny. You kind of look like a big green candle right now. If you just like tuck your arms in, hold your arms in, David is a big green candle right now.
Well, no, they can't see that. They just see dick butt.
Oh man. Well, I'll have to screenshot this for everyone else. Let's look at some charts though. A few coins of note this week. The first is first let's get a crypto market cap. Are we above $1 trillion? We are.
Yeah, we are above $1 trillion, $1.04 trillion. We are now once again measuring the total crypto market cap with a T instead of a B, which makes me feel good.
We love the T's. All right, some charts. Let's look at Aptos. Why do you want to show us Aptos today, David?
Because it's on the menu. It's on the list. It's on CoinGecko. Aptos is there trading at $1 point something billion with a fully diluted valuation of $9.2 billion. So Ryan, you're wondering...
Are you kidding me? It's almost worth $10 billion?
It's almost worth $10 billion. So you wonder why there's like all of these VCs are always doing these like alt layer one, like Ethereum killers. And now Aptos is like the Solana killer. And maybe eventually there'll be the Aptos killer. It's because these things keep on coming to market at billions of dollars. So it doesn't matter that they're doing like these $300 million seed rounds. The VCs have to do it because it works.
It works every time, every cycle.
Every time.
Almost like it works in like, it seems like 1 out of 10 layer one bets. I don't know. I just pulled that number out of nowhere, but like it works a lot of the time.
It works too much of the time.
Such that if you're a rational VC, you almost have to take these bets.
Yeah.
Dogecoin. What's Doge doing this
Dogecoin
week?
is up 30% on the week. I think it's actually the winner of the week over the 7-day period. Why? I'm so glad you asked, Ryan. It's because Elon Musk bought Twitter. That deal is going through. Yeah, totally. And so Elon Musk, the pumper of Doge, is now the CEO leader of Twitter. And so as a result, Doge goes from 6 cents to where it is now at a little over 7.5 cents. So up 30-something percent.
Did you see that picture of him like walking to the Twitter offices?
Yeah, with a big ass
like
sink.
A kitchen sink.
Why was he doing that?
Yeah, I think it was some joke of like, I threw in everything, but even the kitchen sink, something like this. And so he showed up with a sink, for the memes. And Doge itself is a meme coin. So, look at that.
Memes
I
all
don't
the way
understand
down,
it. ETH.
And
that
ETH, of
is
course,
on your
the
list
big
too.
one. Yeah, the number one biggest increase in total crypto market cap came from ETH. So over the 7-day period, like we said, up almost 20%.
I'm just looking at the charts and looking at these lows when we were down in the 900s. That was back in June, so a few months ago now.
I'm going to once again flex my bottom tick buy of $897, which doesn't even show up as a low on the CoinGecko chart. Like, you just have to take the dub on that one.
You know what? I'm going to let you flex that because I respect that. I respect that, David. That was definitely a good buy. I think it could hold up. But there's a big question we're going to get to is, have we seen the bottom yet? But before we do, let's talk about Meta. Has Meta seen the bottom, David? Yeah. Meta had this is, of course, Facebook, formerly Facebook, now called Meta. We don't talk about stocks often, but this is notable. If you bought $10,000 worth of Meta 7 years ago, you would now have 9,546 for the astute listeners. That is less than $10,000 over a 7-year period of time. Pretty big miss.
That's pretty rough.
And earnings came out yesterday. I don't know if you caught some of that, but basically the TLDR is like all of this investment in the metaverse not yet paying off. Yeah, there are other contributing factors to poor earnings, but like big losses not paying off yet. Do you have any other takes here?
No, that sounds about right. But I think if you would expect, like, hey, if you're going to invest in the metaverse, when we literally invented this metaverse word like a year ago in terms of like investability and infrastructure, like you'd expect to take losses early in order to be able to profit and harvest later. So like that shouldn't come out as a big surprise.
Dude, if it goes down another 25%, this tweet is saying it will be less than the market cap of Ethereum. So Ethereum will flip in Meta.
Yeah, Meta right now is worth less than Home Depot.
Wow, really?
Yeah. Yep. Mm-hmm.
Yikes.
Yeah.
Which
kind of makes sense in like this whole era of the macro economy, like commodities, real
Digital
world
down.
stuff, like building actual housing. It makes sense that Home Depot would have like a good valuation versus Metaverse right now.
Yeah. I can't take advice looking at you right now from you in the suit, but yes.
Well, you're BitBoy, bro. How can I take advice from you?
I'm a generic crypto influencer. And by the way, thousands of people take advice from crypto influencers, millions, might I add. You should see my follower counts. The big question, though, David, I think the people want to know is, have we bottomed yet? This is a article from Zero Hedge from Druckenmiller, Stanley Druckenmiller. A decade of no returns, he says, is the title of this. And this is based on Druckenmiller's recent comments. Here's one quote from him. There's a high probability in my mind that the market, at best, is going to be kind of flat for 10 years, sort of like 1966 to 82 time period. This is sort of not just Druckenmiller saying this, but a lot of macro thought leaders saying this as well, that basically we could be in for a flat decade, a flat or maybe a down decade. And primarily they're talking about like, you know, bonds, of course, but also equities. And so there's that idea. What do you think of that idea generally? And then we can give kind of the counterpoint to this.
When we talk to Lynn Alden and we try and get, hey, Lynn Alden, we're confused and scared. Will you help us like tell a story about the history of stuff? And she like pulls in like, well, this part of this macro world looks like this decade. This part of the macro world looks like that decade. I think that's what Stanley Druckenmiller is doing, is saying like, hey, like inflation, let's go backwards a few decades and say, hey, let's go, you know, look at the last time there was inflation and like the stock market didn't move for over a decade. I think that's what he's doing. And I think just the broader question is, does history rhyme, and to what degree? I think the other more relevant question is, how much does crypto get caught up in that? And like we're definitely coupled to macro now, but like we were also coupled to macro. People don't really talk about this often, but we were also coupled to macro in 2018 when crypto prices crashed. Like interest rates were going up in 2018, and then over time, we had the bear market, we had the crypto bear market, also called the build market. And eventually what happened was that we built so much that we just forced our own decoupling during DeFi summer. I guess it wasn't totally decoupling because that's also when like stimmy checks were going out. But like crypto did decouple and like move away from the stock market. So at some point, like building crypto will just take over, and there's no way that crypto can have like a 10-year flat market because we build too fast. Like stuff happens too quickly.
So there's, I think, two questions here. So, you know, one question is Druckenmiller right about this being the decade of no returns? And the second question is, how could that affect crypto if he is right? This is Vance Spencer's take from Framework. What if the doomers are wrong? What if the macro podcasters are just relishing in their 15 minutes of fame? Run for your life, Anon. I think the take here is like, good news or bad news tends to kind of spread virally and crowd out good news. And sometimes you can be seen as more of an expert if you're predicting, chaos and negative things than in predicting bullishness. And Vance is just like saying, what if everyone's wrong about this? It's almost like Druckenmiller has kind of become a consensus view. There's a question of what if macro is wrong? But then there's also a question of like macro. Druckenmiller could be right on macro, Vance could be right on macro, but like, how do you prepare for either case? And crypto podcast, we are crypto bullish, obviously, but like, do you know what seems pretty compelling is the asset class of crypto, because it is different than equities. It is also different, of course, than bonds in that it is a type of commodity money whose issuance is decreasing over time. It's actually deflating. And so as long as digital like block space demand increases on something like Ethereum and supply goes down, I think it stands in contrast to other assets, even equities in the market. And so I do really am very optimistic that even if Druckenmiller is right, I think we will see a decoupling of macro from crypto at some point during this decade. And that could be an absolutely massive decoupling event too. So I'm still super bullish on the we call the crypto barbell strategy, where you have like your crypto, and that's a large majority of your investments. And then you have super safe assets like dollars, for instance, like stablecoins and crypto,
dollars
two sides of the bar. Yeah. And then like nothing in the middle. That's my favorite way to approach these markets. Of course, not financial advice, but we'll see what happens next. David, BUSD, the stablecoin, the Binance stablecoin, it's on a tear. What's happening here?
The total supply is going up. It's crossed $20 billion this month for the first time ever, and now owns more than 15% of all stablecoin market share. And according to some data out of the block here, BUSD accounts for 22% of stablecoin trading pair volume. So Binance USD getting planting a flag. It's here to stay.
It's interesting to see who it's taking away from. A little bit of USDC. It looks like it's taking away from. That's the pink here that you see. And then the bottom, this sort of purple blue is USDT. So it's taking a little bit from USDC and a little bit from Tether in order to carve out that market share.
Well, that makes sense. Those are the two other big ones.
Wall Street Journal. This is a headline. Andreessen Horowitz, A16Z, went all in on crypto at the worst possible time. What do you make of this headline, and what's the article say?
Yeah, it's basically just kind of a recap of the state of A16Z's crypto fund thus far. A16Z, of course, raised $4.5 billion, the largest ever fund to raise anything for crypto ever. And then but the line here is that the crypto fund has shed 40% of its value in the first half of this year, according to people familiar with the matter, says the article. Basically, they deployed a lot of capital at the top. And they still have a ton of cash, and they say despite the record cash pile, A16Z Andreessen has dramatically slowed the pace of its crypto investments this year. Mainly, I think what we're really seeing is we're just seeing trad media reporting that A16Z crypto's down bad. But I think there's no way that all of A16Z was allocating during 2021, where valuations were extremely overpriced. Without knowing that. It's not like, pitch deck for $100 million valuation. Like, they're smart people at A16Z. They kind of know that they were allocating at the top, and I think they're ready to take that. Well,
what's funny to me is it's down 40% in crypto. I'm like, I consider that a win. Well done. Only down 20,
Ether
40%.
And Bitcoin are down like 85% at the bottom, right? Yeah.
Yeah, it's funny how these headlines come out at
maybe 70%
at these times. All right, guys, we got a lot coming up next. David, what is happening next in the roll-up?
Ether, almost ultra sound, maybe ultrasound by the time you are listening to this. We're going to continue a little bit of the conversation of inflation versus deflation when it comes to Ether, and also talk about the security spend over the last 30 to 40 days, because those numbers get me real excited. And then also as well, Apple wants to sterilize your NFTs. What the hell does that mean? And PayPal continuing to be shady. So we'll get to all of these conversations and more. Ryan, do you know why? So last year I painted my CryptoPunk onto my face.
Yeah.
And I wore the hat, and I actually was my CryptoPunk.
Yeah.
You know why I had to do the green screen thing this year?
Why?
Because my crypto dick butt's naked.
You weren't willing to do that for the podcast.
I was not willing to do. Well, what would I do? I'd be like, I have my crypto dick butt. Here I am without a shirt. No, I couldn't do that.
I don't know. Whatever it takes for the views. That's what a crypto influencer would do. If you're a real YouTuber, it's all about those views, David. All right, guys, we'll be right back with more. First, we're going to get to these sponsors.
ARBITRUM 1 is pioneering the world of secure Ethereum scalability and is continuing to accelerate the Web3 landscape. Hundreds of projects have already deployed on ARBITRUM 1, producing flourishing DeFi and NFT ecosystems. With the recent addition of ARBITRUM Nova, gaming and social dApps like Reddit are also now calling ARBITRUM home. Both ARBITRUM 1 and Nova leverage the security and decentralization of Ethereum and provide a builder experience that's intuitive, familiar, and fully EVM compatible. On Arbitrum, both builders and users will experience faster transaction speeds with significantly lower gas fees. With Arbitrum's recent migration to Arbitrum Nitro, it's also now 10 times faster than before. Visit arbitrum.io, where you can join the community, dive into the developer docs, bridge your assets, and start building your first dApp. With Arbitrum, experience Web3 development the way it was meant to be: secure, fast, cheap, and friction-free. The reality today is that 5 corporations control the entire world of social media. They own our names, they restrict our content, they monitor our every move. And their time is up, thanks to our sponsor, DESO. DESO is a layer 1 blockchain built from the ground up to decentralize and scale social networks. With DESO, you can own your own identity, content, and social graph, and take it with you across hundreds of applications already built on the censorship-resistant DESO blockchain. DESO's storage advantages make it finally possible to build infinite state applications that can efficiently store and index large amounts of content and data fully on-chain. DESO also offers multiple crypto-native monetization primitives for developers and creators, including social NFTs, social DAOs, social tokens, and social tipping. So in order to experience the social layer of Web3, go to DESO.com and claim your username. That's DESO.com.
Ether, it's finally happening, David. Ether is almost ultrasound money. It's almost official. David, what are we looking at? What are the stats? What are we waiting for?
We're, of course, looking at our favorite website, ultrasound.money. We're not there yet, but we're so close. The trajectory looks really strong. Ether, since the merge 42 days ago, has issued 0.009% inflation. That is a total supply of net new total supply of 1,200. I actually saw it down to as low as 950 Ether since the merge yesterday. So for over 42 days, about 1,000 Ether has been issued to pay for Ethereum security. Just 1,000 Ether. Less than 0.01%. So we are so close.
When's it going to happen?
Ultrasound.
Look, it's kind of like, going up and down on the bottom here. When's it going to happen?
It's real teasing us. I put out a tweet yesterday saying today's
Such
the
a
day,
tease.
but Mike, the gas fees are just only barely above the threshold. So we were burning just a little bit. So this could carry on a little bit. But I mean, the trajectory is so good, Ryan.
But is this a new glasses emoji on the current supply? I think that is.
Wait, what?
Do you know nothing triggers me more than glasses, David? Nothing.
That guy wearing his goddamn glasses.
The current supply
Is
of
that
the
because
elites.
of the shenanigans? What happens when you click it?
I have no idea. It's just glasses. So triggering. Some kind of elite banker money. That's what we've fallen for. What you tweeted something about this. Let me read your tweet. Ethereum has spent just 2.3 million on security the last 40 days. Because of how efficient proof of stake is, that 2.3 million of costs produced 13.5 billion of security. So that's a pretty good ROI. What are we talking about here?
Yeah, so that number is actually lower now because we burnt more Ether since that time. We were actually at $1.8 million spent on security over the last 42 days, and that produced $13.5 billion of security. That $13.5 billion of security, of course, is the amount of Ether that is staked to the Ethereum network that you would have to slash. So that is actually only 66% of the value of all staked Ether, because if you want to go backwards on Ethereum, if you want to do a 51% attack, basically you have to slash 2/3 of all Ether.
This is a crazy stat, man. I can't
that
believe it.
$13.5 billion is 2/3 of the amount of the Ether staked to Ethereum. And we are incentivizing that which is actually, so like total $20 billion of Ether is being staked-ish, give or take. And that $20 billion of security is coming just from $1.8 million of issuance over 42 days. You want to see something crazy, Ryan?
Yeah.
Scroll down and just read the comments on this.
Such a wild stat.
That's Victor Bunin. That's like the one positive comment. If you scroll down, I got into triggered some Bitcoiners. And so the Bitcoiners just brigaded this tweet thread.
Oh, really?
And now they're all just making fun of me.
Ultrasound lost nearly 33 million in exploits in the last 30 days. What are you talking about?
That's apples to oranges.
Ethereum, that's not even relevant.
This tweet just got like absolutely brigaded by Bitcoin maxis because they did not like this at all.
Effing buffoon. Oh,
yeah,
I agree with that one, dude. Any comments on OFAC compliance? A monetary policy that can change on a whim is definitely not ultrasound money. Educate yourself. Oh well, I guess some people will see over time.
And so here's my take about this. So we've been talking about the global macro world right now. We've been calling it wartime economies, right? Wartime economies is where the United States is going to inflate the dollar in order to pay for the assurances that Ukraine win the war in Russia. We are inflating the dollar. We're going to pay. We're going to subsidize energy in Europe so that Europe doesn't have to pay Russia money to heat Europe. So we're going to inflate the dollar as a result of that. What wartime economies means to me, Ryan, is that we have these warring nations that are throwing their fiat currencies at each other, trying to win an economic war against each other, and that comes at the loss of the value of the currency. They are trying to out-expend their economic opponents. Europe is trying to secure the European economy. The United States is trying to secure the American economy. We're trying to end the war. We're trying to end the war in Ukraine by just spending more than Russia, and we're trying to do that so we don't have to engage with the Russian economy, and so we're just throwing our currencies at each other. That's what wartime economies are. Wars are expensive, and the result is a currency inflation and a tax on savers. The people that are basically footing the bill for these wartime economies are bondholders. In stark contrast to Ether and the ETH stake rate, Ethereum has no wars. We have very minimal expenditures, and we only have savings. And so these things cannot be polar opposites of each other. Ethereum does one thing and secure the Ethereum economy. The United States nation does many, many things, and it does those things at a loss for the value of the dollar, because we're trying to secure more than just the United States economy. And so the contrast here, I think, could not be stronger.
Well, this is why I think the Ether as an internet bond is going to kind of take off as a versus sovereign debt. Like sovereign debt is bonds, the debt of nations, right? And that's what's kind of spiraling out of control. But when you can, instead of buying a sovereign debt, buy an internet bond, non-sovereign debt, right? Or crypto network secured debt, essentially, that's an entirely new asset class. And that's what we mean when we're talking about Druckenmiller, kind of like the flat decade. This is where crypto, I think, could really start to outpace all of the other assets, equities that are kind of based on nation state economies, and then bonds themselves, which of course are totally tied into nation state economies. And then here's a new internet native network state economy like Ethereum, and it has completely different economics. It's just going to outcompete them as an asset class. That's at least, I think, a possible prediction for how this turns out. David, we got some weird news coming out of Apple. Here's the headline. Apple refuses to exempt NFTs from the App Store's 30% fee. So dealing with another gatekeeper, not the banks this time, but a big tech gatekeeper. The Apple platform, of course, takes a 30% cut on all App Store related fees. So any app that generates a fee, Apple gets their 30%. And they say, hey, crypto should be the exact same. What's going on with this story?
Yeah, there's just a number of rules that Apple has placed. So apps may use in-app purchase to sell and sell services related to non-fungible tokens, such as minting, listing, and transferring. Okay, cool. So we can sell NFTs inside of the App Store. Great. Except for we have to pay them 30%. Apps may allow viewers to view their own NFTs, provided that NFT ownership does not unlock features or functionality within the app. Okay, so if your NFT does something, it better not do that thing inside of the App Store. And then lastly, apps may allow users to browse NFT collections owned by others, provided that the apps may not include buttons, external links, or other calls to action that direct customers to purchasing mechanisms other than the in-app purchase. This is like nation-state capital controls, except it's the Apple ecosystem.
Monopoly, basically.
It's a monopoly. It's a monopoly, and they're saying like, hey, all your taxes belong to us. No commerce shall happen on an Apple device that Apple does not receive a tax on, and that tax is 30%.
What's interesting here is like the posture is like, yeah, we're not going to ban NFTs, guys. We're not going to ban NFTs, all right? All we're doing is imposing our regular 30% tax on NFTs. Oh, and by the way, they can't actually do anything. So they can't unlock, they can't have any utility inside of the application. It just has to be a JPEG, like a pretty picture or something like this, a collectible of some sort. And then we'll allow you to do that, right? It's completely permission.
You can view them, yeah.
It feels very much like, do you know how Josh Rosenthal in the Crypto Renaissance podcast, it talked about how we are, like, from a digital perspective, living in almost feudal times, right? It's like we don't own any of our own property.
We have to ask permission to live.
Yeah, big Silicon Valley tech companies are the landlords, right? We are the plebs. We are the serfs that work their land.
And we just accept it.
You just accept it. Just take it. Like, this does not work. And I'm so hopeful that Web3 and crypto will disrupt this monopoly.
The pushback on this was really, really strong. And so this is a tweet that with a screenshot says, with Apple's new rules, social networking apps like Facebook, Instagram, Twitter that allow companies to buy boosts for social media posts must use in-app purchases for these transactions. Wow. This means when an advertiser wants to boost a post on a social network like Facebook or Twitter using an iOS device, Facebook will be required to give Apple a 30% cut of the proceeds. So this is not only like Apple going off to the users and say, hey, users pay us 30%, but also going off to Zuckerberg and say, Zuckerberg, you pay Apple 30% to access anyone that has an iPhone.
Wow. So the feudal lords battling the other feudal lords there as well.
Yeah.
What's this tweet from Tim Sweeney?
Tim Sweeney, yeah. To cryptocurrency enthusiasts, this means Apple is now adding a 30% tax on your so-called true ownership of digital goods. To cryptocurrency detractors, this shows Apple's motivations are only money. For digital items, they don't support NFTs, they tax. They ban NFTs, they don't tax. Yeah.
So how do we get out of this, David? Does crypto need to build its own phones? We need our own app store. Do we need to fork Android? Do you know the Solana phone? The
Solana people were all up in arms. This was one gigantic advertisement to the whole Solana phone, Solana operating system.
The concept.
And kind of like why they said that justification as to why they need to do this in the first place. So like you got to hand it to them. This is exactly what they were talking about when they made that whole Solana phone to begin with.
I feel like a forked version of the Android maybe is another path to take. But ultimately, I think competitive forces will require that Apple reverse course here, but we'll see how that plays out.
It basically goes against the entire NFT industry.
It does. Let's talk about PayPal. This is do you remember there's a few rollups ago? Remember that thing where PayPal updated their terms of service so they could steal like $2,500 from your account if you have a PayPal account? They updated their terms of service to say that if you said something they don't like, for example, for any reason,
if you
is against their
verbalize
policy,
anything that violates their terms of service.
Exactly. And then people got really upset on Twitter about this and kind of media, and they called PayPal out for it. And PayPal was like, no, just that was a mistake. Just kidding. We didn't actually add that to the terms. That was a mistake. Don't know how that got out. And they removed it from their terms. Well, last week they just added this language back in, like when
with no change,
the world wasn't
Zero
looking.
Change.
I guess everyone was obsessed with Kanye, and like no one was looking. And then this is the terms that they added: the promotion of hate, violence, racial, or other forms of intolerance that is discriminatory gives them essentially the ability to withdraw $2,500 from your bank account. Here's the thing, Dave. It's like, how crazy is this? Like, we have to. I mean, how often have you read your bank's terms of services, right? Or PayPal's terms of services? Or do you keep up with every update when they release a new terms of service?
Absolutely not.
No one does. It's impossible.
That would be drowning in. That would be if I did that. If you read every single terms of service, that would be like a mental disorder, and you would need to get help
for sure. And like also, it'd be like a full time. Like you don't. There's not even the capacity to do
it. Would suck up your entire life.
That's how broken it is. I loved a tweet from one commenter who said, "Where are the immutable terms of service? We can't stay up to date with all the terms of service of the millions of services we use daily. Yeah, particularly banks. Where are the immutable terms of services?" David, that's what crypto is.
Is that what a smart contract is?
That's what a smart contract is. It's an immutable terms of service where no one can go back and reverse things on you, or while you're not looking, change the rules to withdraw $2,500 from your ETH address when you're not looking. That's impossible. We have immutable terms of service. This is why we go bankless. And whether PayPal plays the game of removing it again and it was like, just kidding, or like, it's not really what we meant, how can we trust them? Right? Like, how can we trust any banks not to slip these sorts of things in when the opportunity arises? Right. This is why we go bankless.
Yeah. And in contrast to terms of service, which is like, 10,000 pages of mostly legal speak, a smart contract, even though like I can't read a smart contract, I don't read code, at least a smart contract is like the minimum viable lines of code needed to do something. So at least they're not adding in and layering in fluff on fluff on fluff on legal speak, right? It's extremely precise.
It's not subjective. Right? It can't be settled in courts. And we know any smart contract, unless it's programmed to explicitly withdraw money from your account, it's not going to. It can't. It doesn't have the ability to. Nor to update.
I would imagine
terms.
Our social media editors, Ryan, like might cut this clip particularly, just like just with the line, "This is why you go bankless," about what we're talking about.
Yeah.
And then our costumes are just on Twitter while we're talking about this with no context, absolutely zero context.
This is why you go bankless. the crazy people in costumes are telling you.
People like, wait, who the hell are these people? I didn't know follow this Twitter
account. This is a serious podcast. All right, once a year we do this. Only once a year. It's not costumes every week. This is your first bankless. We do not dress like this every single week. But David, what do we have coming up next? Some super serious topics. What are they?
MakerDAO had a vote to go either with Rune Christensen's endgame or go against it. Mad King Rune is back. Oof. Or is there broad community support? We'll have to figure that one out. Also, Lord of the Rings NFTs, exciting or dud. We'll see what Lord of the Rings and Warner Brothers is doing in Web3. And also, FTX Stablecoin. What do you think the FTX Stablecoin ticker would be called, Ryan?
FUSD? No.
FUSD. FUSD.
That could be a meme in itself.
They should. Anyways, all of these conversations and more right after we get to some of these fantastic sponsors that make the show possible.
The Brave Wallet is your secure multi-chain on-ramp into Web3, and it's built directly into the Brave privacy browser. Gone are the days of managing multiple wallet extensions that put you at risk of phishing, spoofs, and tracking. With the Brave Wallet, you can securely manage your crypto assets across more than 100 different chains, including Ethereum, Layer 2s, Solana, and more, all without downloading risky extensions. The Brave Wallet is easy to set up and removes the headache of jumping between wallets and extensions. It's lightweight, but packed with great features, like built-in token swaps, buying and holding NFTs with a gallery view, and support for hardware wallets. But also much more than that, because Brave is shipping new features every single month, with a mission to make Web3 easier to navigate for its over 55 million users. Wallet extensions are a thing of the past, so get started with Brave's Web3 ready browser today and experience a decentralized web seamlessly without all the clutter. You can download the browser at brave.com/bankless and click the wallet icon to get started. TRUEFI is DeFi's largest credit protocol, connecting global lenders with institutional-grade lending opportunities. TRUEFI has completed over $1.7 billion in originations and paid out nearly $35 million to lenders, proving that DeFi is ready to take its next big leap into the $8 trillion credit market. TRUEFI gives lenders like you access to sustainable, high-yield opportunities backed by real-world investments, usually reserved for high-net-worth individuals. At the same time, fund managers use TRUEFI's financial infrastructure to bring their portfolios on-chain, benefiting from the global liquidity, cost savings, and transparency of DeFi. TRUEFI is a decentralized financial utility. The protocol is owned and governed by the TRUEFI DAO, and TRUEFI is here to bring DeFi into the golden age, bridging the power and access of crypto with institutional-grade lending opportunities and portfolio tooling. Explore the diverse financial opportunities available on TRUEFI or launch your own portfolio at TRUEFI.io.
Devcon 6, which was, of course, a little over a week ago, but all my interviews are out now. So the Devcon 6 experience, if you want to catch up on Devcon and feel like you didn't miss a beat, all of my Devcon videos are interviews with Vitalik, Dankrad, Justin Drake, Kevin Owaki, Aya Miyaguchi, Peter from Geth. The first interview I've ever seen from Peter.
These are the
from
protocol
Geth.
devs, yeah.
These are the protocol devs. All of these interviews, they're between 10 to 20 minutes long, just bite-sized interviews to catch you up with what happened at DevCon. So don't miss out on DevCon. A bunch of cool stuff happened.
Where's that? That's on YouTube. It's also on the RSS feed, though, right?
It's also on the RSS feed. So either way, wherever you're listening to this, they are where you are listening to this. So go check those out.
I listened to the Vitalik one. I can't wait to listen to others. DevCon 6, right? Because this is Roman numeral.
Yes, I messed up my Roman numerals.
Yeah. It's been a while. Who knows? Who uses Roman numerals anyway?
Yeah, it's ridiculous.
The fake number system. Okay, MakerDAO. They this is the MakerDAO news we were talking about just before the break in two parts. So the first part is the community has approved Coinbase's proposal to custody up to $1.6 billion of USDC with Coinbase Prime. The reason they're doing that is to get a little bit of return on that money. It's interesting that that is all being custodied, but I guess it also doesn't matter because it's USDC anyway. Yeah. So it's all Coinbase money at the end of the day. That's one part of the Maker news. What's the other part here?
Yeah, the other part is the broad MakerDAO member support of Rune Christensen's endgame plan to break up MakerDAO into many, many, many meta DAOs, smaller DAOs. This is an effort to make MakerDAO more censorship resistant, more decentralized, and definitely part of the reaction to Tornado Cash and some other just regulatory influences. But this has been, of course, controversial because while there has been about 80% in support versus 20% against, 74% was Rune Christensen and all delegates to Rune Christensen. So it's a little bit that like Rune, it's kind of Rune's way or the highway with how much broad
but isn't
support
the problem
he
here
has.
like voter apathy? Like if people wanted to vote
Perhaps,
something else, then just vote something else. It's not like he has all of that economic interest.
I wouldn't necessarily call it voter apathy because if it was a bigger deal, then there'd be less apathy. I think people are kind of just trusting with who they're delegating to. But there's been some controversy as to just it's really hard to outvote Rune. It's really, really hard to outvote Rune.
This is Hazu.
Hazu, who is probably the leader of the no side of the endgame plan, tweets out, "The endgame plan is an exceptionally bad proposal, and it's really sad for Maker that it passed the signal, shoved through by Rune single-handedly in the face of strong and justified criticism. How much of it will actually be implemented remains to be seen." And so this is this is controversial. I would say there's not unanimous support by the maker community on the endgame plan, yet it went through anyways.
DAOs are messy. Is that the takeaway here?
DAOs are messy. Yep.
DAOs are messy.
Yep.
DAOs are hard.
Especially MakerDAO is especially messy.
Yeah, I don't know like what side I'd fall on, because it's honestly it's gone beyond me in terms of the intricate details here. So I can't even give you a take here other than DAOs are kind of messy. We got to fix governance. We got to figure that out. Layer 2 community grants from the Ethereum Foundation. They are now open. What does this mean, David?
Yeah, the Ethereum Foundation launching a grants initiative to encourage research and development around the Layer 2 applications, education, and ecosystem. That includes stuff like block explorers, compression technology, and just broad education. And so the grant round has $750,000, $750,000 in total grants available. Proposals are due in 6 weeks, starting from a few days ago. So that will take us into December. And so if you have some sort of project and you want to make a proposal about it, no matter what phase of that project in, whether it's just an idea, proof of concept, work in progress, or fleshed out, doesn't matter, you can submit your project to the EF's grant system for 2022 Layer 2s.
A lot of great projects got started in the grant system. ENS comes to mind, Uniswap, of course. Meanwhile, in the NFT world, NFTs, Reddit NFTs, that is, are picking up steam, and it is definitely showing in the numbers. David, this is a tweet called The Flippening, and we're seeing what? King Reddit Alien at the number one spot above CryptoPunks? Is that what just happened?
Yeah. This is volume numbers of ETH traded for the Reddit avatars, coming in at 503 Ether volume. I think over what must be a 7-day period, maybe a 1-day period, versus CryptoPunks coming in at number 2 at 378 Ether traded.
This is on
so
OpenSea.
I actually kind of didn't. This is actually completely unexpected to me, because I kind of thought that if you are collecting like Reddit digital collectibles on like Polygon, I didn't think that you would be trading these things for a bunch of Ether. And not only that, but like spooky season Reddit collectible avatars coming in at number 1. Another Reddit collectible is coming in at number 4 at 183. And so these are actually hooking themselves right into the DeFi NFT ecosystem on Polygon.
This is
Mihalo from Polygon says, Reddit NFTs are an amazing example and a huge win for all of Web3. 3 million wallets, 99% unique users, $100 million market cap, and a native Reddit community. Organic, no crypto Twitter noise and no price pumping.
It's true.
And all of this stuff is just, yeah, that's a good point. And it's all on Polygon. So congrats to Polygon on this huge win. I always thought Reddit was going to be on ARBITRUM AnyTrust. What the hell happened there?
Yeah, I don't know. But I can say, as a crypto YouTube influencer, I'm pretty upset I didn't get to pump these NFTs myself.
Couldn't dump on your listeners, huh?
Yes.
That is upsetting, because that is your business model.
Do you know, William Peaster wrote a fantastic article. If you're looking to find out more, if you're a crypto native, you're not in the Reddit NFT scene, this is almost like we're translating, normie NFTs for crypto users. And you could see it on Dune Analytics, David. Look at this graph.
That's awesome.
Reddit NFT
that's up and to the right.
Usage up and to the right. Anyway, go check it out if you want to read more about the Reddit collectible avatars, but it's really showing up in the numbers. And it's really cool that ETH is kind of the money for all of these systems as well.
Yeah, that's nuts.
Yeah, piercing into normie space. Speaking of which, Lord of the Rings. Haven't you always wanted an NFT for Lord of the Rings?
I actually haven't asked myself that question.
I mean, look, I'm a huge Lord of the Rings fan. Did you watch any of the Rings of Power stuff?
Yeah, they didn't capture my attention, but I watched a few episodes.
Yeah, same here. It's not quite the same level. This is the OG, the original Lord of the Rings, and this looks like Warner Brothers is introducing a whole movie experience, a set of NFTs, a collection of NFTs. I think there's about 11,000 NFTs here as part of their Web3 movie push. What's this about, David?
Yeah, if you go back to the first tweet, they are really leaning into the whole Web3 thing. So the tweet reads, introducing a hashtag Web3 movie experience. And like in the little promo trailer, like under the Warner Brothers logo, they have Web3 in the actual animation. And it's kind of confusing as to what that means, but it does look like some sort of immersive experience where you get to explore parts of the Lord of the Rings world. I don't know how you would do that. guess with your TV remote, you would navigate it on your TV. It reminds me of those old weird DVD games that you would play. DVD menus. But I mean, they're leaning into it, and there are collectible things. I don't even know what you collect, but there are things that you can mint. There are NFTs that you can mint. Like what they actually are minting, I don't really know. But the point is that they unlock things. So I'll read from the articles here. Users can pick from 2 options for the Lord of the Rings NFTs. There are the mystery editions, when users can randomly mint a common, uncommon, or rare NFT, respectively, based on the Shire, Rivendell, and Mines of Moria locations in the film. Minting one of these NFTs also gives users access to the extended 4K version of the film, 8 hours of special features and commentary, as well as location-specific images and AR collectibles. This option contains 10,000 NFTs costing $30 each.
Oh, so you get the movies too. It's like
you get 8 hours of content. So this is an NFT access thing that gives you stuff.
A new way to buy the DVD sort of thing.
Exactly. The second option is an Epic Edition costing $100 for 999 NFTs, include image galleries and AR collectibles to the Shire, Rivendell, and Mines of Moria, in addition to the extended 4K film and 8 hours of special features. So this is what NFTs are for. These are for the super fans. Maybe you're watching this and I'm confused. But the super fans are watching this thing and be like, I'm totally buying those. I don't care what they are. And so that's what's going on here. All they need is 10,999 people to buy one of these things. And but there's definitely a lot of Lord of the Rings fans out there who are probably super stoked to buy one of these things.
Yeah, also in crypto, right? The Venn diagram's got to be pretty close there.
Decent. Ryan might be one of these people.
Yeah, I might be one of these. Maybe. I've been called a fan. But do you know, I almost bought one of these, or I almost investigated it, but I have no idea what chain it's on, what's it using. It's something I've never heard of called Alluve.io, the content blockchain. So I don't know very much about this, and unless an NFT is somehow secured by Ethereum.
The website is kind of 2017 vibes.
A little strange, a little sketch.
It's a little.
Oh, they got a white paper though.
Yeah, they got a white paper.
It's a 2022 white paper.
Yeah, the kind of thing doesn't really work. Click the blockchain tab on the top right there. Yeah, token model, our blockchain technology background, it's I don't know, it's plain.
This is the thing, what is an NFT if you don't have your kind of settlement guarantees, or if you don't know what the settlement guarantees are?
No, it's like a Top Shot kind of thing where they don't really care about the settlement guarantees.
I guess. Well,
but a brand new blockchain, the problem, settlement guarantees is one thing. If you want to give up settlement guarantees, fine. But you got to hook yourself into the rest of the ecosystem. There's network effects to Ethereum.
Yeah, for sure.
Oh God, this website's so cringe. The content blockchain.
Look, it's a start though, and
I had never heard of this thing.
No, I've never heard of this thing either. It's a start though, and there are more experiments coming down the pike, including this one from Wright. Did you ever play games like The Sims or SimCity or anything?
Oh, totally. Oh, Sim Tower. Remember Sim Tower?
Sim Tower. Okay. I did The Sims. I did SimCity.
Did you play The Sims, or were you just like me and you just made the houses over and over?
You make the houses, and then you make the pool, and then you put the Sims in the pool, and then you remove the ladder. That was my favorite thing to do.
Wow, that's pretty masochistic.
They're not real, David.
Says the AI. One of my friends would put them into a room with a toilet and a computer and make them write books to make money, and that's the only thing that they could do.
I wonder how many people were playing Sims just to do weird dark things
just to torture
this.
Their Sims. Yeah.
Anyways, beside the point, Wright, the great leader behind The Sims, all of the SimCity, all of those games, he's now making a blockchain game. Cool. He is excited about including NFTs, but is also kind of down on NFTs. I think there's a quote here where he says, I don't really want to be in the business of selling NFTs, so that's off the table, Wright says, emphasizing that his interest is in blockchain's ability to allow for secure transactions between players. Pretty cool, though.
Makes sense.
Have a legendary game developer starting to do things on chain as well.
Yeah, I would imagine just we talk about how stablecoins are just way better than bank transfers, PayPal, Venmo. Yeah. The UX of stablecoins is just way better. And I think that's what he's leaning into here. He says he can just make transactions happen between players without having to sign up for some third-party intermediaries, no banks, just chains, users and transactions.
Imagine,
which is great.
Imagine a sim economy. That'd be pretty badass.
Oh my God.
It's you have cities, you have
You mean
sims.
a metaverse economy?
But you have this whole simulated economy, but it's actually real. It actually has some kind of real economic ties. I bet someone like Wright could do that.
Sounds like a metaverse, bro.
Bitcoin, Salvadorians. They have been surveyed recently, of course. El Salvador, and the leader of El Salvador recently adopted and legalized Bitcoin as legal tender. In fact, kind of made it mandatory in sort of a weird authoritarian move. But actually 77% of Salvadorians surveyed think the government should stop spending public money on Bitcoin. What's your take on this?
Yeah, I feel like it shouldn't come as a surprise when El Salvador, which has a lot of room for improvement, I'm assuming, as a country and like all the citizens are like, hey, instead of buying Bitcoin, can you invest in public infrastructure? I mean, I feel like that's a pretty simple take to have as a citizen of a country.
Yeah, I mean, what is Bitcoin actually doing to help the lives of El Salvadorians, right? That'd be the question I would be asking as a citizen, obviously. Yeah. And Bukele just seems to be about talking about how great Bitcoin is and like popping the prize, being part of that kind of the in-group of Bitcoin.
Well, he took his laser eyes off a couple months ago.
Did he? So maybe that's diminishing. A bear market does that, removes the laser eyes.
Yeah.
FTX, they could launch their own stablecoin, maybe via partnership, says Sam Bankman-Fried. It doesn't surprise me, David. You saw BUSD in the market section gaining on USDC. Every major crypto bank has got to have a stablecoin, don't they, to enter this world?
Yeah. 100%. And like FTX is so big that like they don't even have to try super hard to make their stablecoin competitive, right? They'll just brute force
What does that mean?
Which is fine.
We're going to just have tons of crypto bank backed stablecoins.
Yeah, I think every single crypto bank will have its own stablecoin.
All the major ones.
I mean, which follows the history of banks, right? Like that's kind of how banks started, is that before there was like universal unit of accounts, like there were individual bank notes.
Yeah.
And that's what, USDC is the bank note of Coinbase. BUSD is the banknote of Binance. FTX needs a banknote.
This is, by the way, people say Bankless hates regulation or DeFi people hate. No, this is a great spot for regulation. We should have some regulation around centralized custodian stablecoins like this to make sure that they are fully backed, to make sure that they are audited, to make sure that kind of the rules do apply. Because where there is centralization, there needs to be some regulation. Sam Bankman-Fried said this. He's kind of hinting at it. We certainly could. We know how to do it. But I think you'll be hearing something from us on that topic in the not too distant future. So it's definitely coming, definitely happening.
What else might be coming is Twitter working on a wallet prototype that supports crypto deposit and withdrawal. Definitely a far deviation away from 240 characters, but who do I know? What do I know?
Yeah, I think this would be amazing. I think it'd be really cool to see Twitter.
What would you do though?
I would deposit and withdraw. I don't know. but like here's the big move for Twitter, right? Elon is I think it's completely official now. I saw a picture of him entering Twitter headquarters with a kitchen sink. And I think the kitchen sink, by the way, just means I think he was just saying, I'll throw in the kitchen sink at this deal. The deal seems to be done. And Elon is very crypto pilled. He's a little strangely Doge pilled, I guess.
Doge pilled, yeah.
But like he's very...
Crypto pilled might be a little generous.
Yeah, maybe that is generous. What do you think Elon thinks about crypto?
I don't know. We should get him on, Elon.
Don't play this clip in the ass to get him on. He'll never come on with us looking like this. This is interesting, David. Elizabeth Warren and others are mad that crypto is hiring a whole bunch of former government employees. There's been, I believe,
is that our fault?
200 government officials have left their public service posts to move into senior positions at crypto startups, the lawmakers say. So,
wow.
Sounds
like some coke,
Senator Warren,
if you ask me.
AOC, and others penned a slew of letters on October 24th to a number of U.S. financial watchdogs about this. Here's what's interesting. Okay. I think there's one take, which is like, oh, this is another industry buying regulators, right? We've seen this before. We're going to see it again. Revolving door, bad thing, right? That's one take. And there might be some truth to that. I'm sure like their paychecks are better in crypto, right? And some people are leaving for the money.
That's for sure.
The other side of it, and this is the side that often goes unacknowledged, I think, by those in government who are very anti-crypto, is like maybe, just maybe, the good people are leaving because they're sick of the incumbent protection racket that many regulatory agencies are running. And they want to find a better way to serve the public because crypto is a public good as well. Do you know, it's like, I think there's this hubris among some in government, not all in government, that the only public good that can be created must come from regulators and government itself, right? And that could not be further from the truth.
Yeah, that sounds like coercion.
So I don't know. I don't know what the take is here. It's like, but I think a lot of people are like, look, if I was working the SEC and I saw the sort of thing Gary Gensler was doing, which is like outside of mission, I would say, is not being financial, transparency. It's not protecting the interests of retail investors. I'd be frustrated by that, and I'd like want to go back to the mission. I feel like part of that mission is fulfilled with open finance, right? It's like transparent, on-chain, fully auditable, completely permissionless. This is a way to protect the people and disrupt the banks, right? There's so many wins, I think, for a lot of these lawmakers and regulators in crypto if they could just see it. But that is another take on what's going on. What do you think?
My take here is, now you care about the revolving door? What about the revolving door for like the banking industry? Like that's the bigger deal. Where the corruption happens. Crypto is literally the uncorruptible side. Anyways, like that's my take.
It's Dave's take.
Oh, now, yeah. Also, you're just jealous that we're having fun.
Yeah, well, I mean, this podcast has been fun so far, David. It's been really fun.
Yeah, fair. You remember Kyle Roche, Ryan? Remember that guy?
Is that the sketchy crypto lawyer dude?
That's the guy, yeah, the guy who denied the claims that he had a formal relationship with Avalanche Labs, Ava Labs, to basically sue and kneecap all of their competition. Anyways, he is starting a new law firm. And so the claim here is that he's starting it because he kind of has to, because his like name has been so incredibly tainted that he had to start a new law firm because his old law firm was like named Roche and Partners or whatever. Anyways, starting a new law firm.
That's great. I mean, I could use a lawyer, but probably not Kyle Roche.
Sounds like the right lawyer for Bitcoin. Excuse me, you.
Yeah, for me. I'm, as a YouTube influencer, I'm pretty excited about lawsuits generally. All right. On the releases side of things, Sound Market is releasing, I believe, their first, maybe secondary market for buying
their
music
first
sound
secondary
NFTs.
Market. Yeah.
Okay.
Right.
What's this? What are we looking at?
Oh, that's what it is.
Okay.
Yeah, we're looking at the first ever secondary market for music NFTs with a 0% listing fee. So congrats to Sound.
Have you bought one yet?
I have not bought a music
need to
NFT
do that.
because I don't want to. I'm not like here to like speculate on music NFTs. As soon as my favorite bands start listing music NFTs, I will start buying.
I think
them.
I want it.
But that's the point.
I think I want to do one just to test though. If anyone has any good artist recommendations for like a test, just like not, maybe not an artist I'm super serious about, but just like to test,
right.
I'd like to see what it's like, see what the experience is like.
Sure. I think you're supposed to find an artist that you like the music of.
That's a lot of work.
And I'm going to make a hot take, Ryan, that the music that you like and the musicians that are minting music NFTs, those Venn diagrams might not overlap a lot.
I can't. Should I be offended by that? It's a Bankless Nation. Help me.
I'm also speaking from personal experience, like my boomer taste in music, where like I listen to the Grateful Dead, and Bruce Springsteen, and the Sheepdogs, which 99.9% of listeners are not familiar with, but they are like a perfect intersection of the Black Keys and the Grateful Dead, and they're from Canada, and they wear Canadian tuxedos 100% of the time. They will not be minting music NFTs anytime soon.
David's got some rocker music taste. It's pretty good.
Yeah, big time.
Socketscan, what are they up to?
Socketscan, this is Socket.tech, formerly known as Mover, have introduced Socketscan.io, the first multi-chain explorer. And so I think we've talked about Socket a few times, but if you have asset A on chain A and you want asset B on chain B, Socketscan will obfuscate every single possible route to get that trade and hop done and just make it super easy for you. And so they've released Socketscan to see all the various ways that you can go across the multi-chain ecosystem. Pretty cool.
Full disclosure, both David and I are angel investors on that one. You can see disclosures in the show notes as always. David, it's jobs time. This is our opportunity to tell you on a weekly basis, we're not going to stop doing this. You need to get a job in crypto. So think about your job right now. Is it in crypto? If the answer to that question is no, it should be.
That's something to change, yeah.
And you got to go to Bankless.
And we have a special job, actually, I would like to highlight, Ryan. So if you can go ahead and click that first job, scriptwriter. Okay. Scriptwriter cool. At Bankless. Yeah. So this job is going to work very closely with yours truly. And if you think that you can write the easiest and most digestible explanations of what is Ethereum, what is DeFi, What are NFTs? What are smart contracts? Anyone, Ryan, can explain these things using 90-minute podcasts. That's easy. It's harder. It's harder to do it in 5 to 15 minutes in just 1,000 to 2,000 words. So, the meme is like, it's actually hard to write, to communicate in less words, and this is what we are looking for. So if you think that you can explain what is DeFi in as short a way as possible, in a way that you would see me expressing this on our new YouTube channel, write a script. Write a script for your preferred what is blank about crypto and send it over. And if it's a good script, if I like it, we might hire you as a formal scriptwriter to start banging these things out. These are going to be the videos that the world sees, because Bankless can explain things better than anyone. That's what we do. And the idea of these is, what is Ethereum? Doesn't get the 10, 15, 20,000 views, but gets 200,000 plus views on YouTube and becomes the canonical videos for how to explain Ethereum, crypto, NFTs, DeFi, smart contracts to the world. So that's my challenge and call to action. If you guys want to work with me writing scripts, write a script, send it my way, and if I like it, we'll hire you.
Help onboard the world, guys. We also got some things from Swell Network, a senior smart contract engineer, another senior front-end engineer.
This dancing is different in a green screen
It looks
too.
way better. Senior back-end engineer, Swell again. Uniswap Labs, director of product management for platform. Uniswap Labs, developer relations lead. Uniswap Labs as well, senior front-end engineer. OpenHedge needs an engineer. Optimism, head of security. Optimism and infrastructure engineer for DevOps. Rabbit Hole, CoinShift. I could go on. All of the listings are there for you on bankless.pallet.com/jobs. You can find all of those things. Guys, we got a lot more coming up. David, what's happening next?
What's coming up next? We got some questions from the nation, which I think are pretty good this week, and also some hot takes from crypto Twitter and beyond. So make sure to like and subscribe to these videos wherever you are listening to them, and we will get to all of these hot questions and cool takes from crypto Twitter as soon as we get back from some of these fantastic messages from these fantastic sponsors.
Sequence is the all-in-one developer platform you need to build Web3 games and applications. For your users, Sequence is a smart wallet, and it's the easiest, most intuitive onboarding your users will ever experience, and comes with all the features users need to feel empowered in the Web3 world. Multi-chain support, NFT display, and users can buy SFTs, NFTs, and crypto directly with a credit or debit card. For developers, Sequence is the plug-and-play platform for Web3 games and apps. Their APIs let you bring NFTs, SFTs, and tokens into your game or application. And a Sequence relayer enables gasless transactions for your users. Sequence already powers some of the best Web3 games like Skyweaver, NFT projects like Cool Cats, and marketplaces like NiftySwap. And Sequence is compatible with all the EVM chains, including Ethereum, Polygon, Binance Smart Chain, Arbitrum, Optimism, and Avalanche. So go to sequence.xyz/bankless to start building, or speak with the Sequence team today. If you've been listening to Bankless, you know that we're fans of the modular blockchain thesis. The idea that blockchains will separate execution from data availability and consensus, allowing all three to become the best versions of themselves. And Fuel has built the fastest modular execution layer in the industry. By supporting parallel transaction execution, Fuel unlocks significantly faster throughput for the Web3 world. Fuel also goes beyond the limitations of the EVM with its own Fuel VM, which is more efficient and optimized, opening up the design space for developers. And lastly, Fuel brings a powerful developer experience with its own domain-specific language, Sway, and a supportive toolchain called Fork. With Fuel, you can have the benefits of smart contract languages like Solidity while adopting the improvements made by the Rust tooling ecosystem, letting the Fuel development environment go beyond the limitations of the EVM. If you want to learn more, there's a link in the show notes to see how you can get involved with the Fuel network.
All right, guys, last part of the roll-up. David's getting real sweaty in that green spandex he's wearing. These are the questions from the nation. If you have a question for the nation, make sure you send that in via Twitter. The ask goes out every Wednesday. You could reply, get your question into the show. This question from Claudia.eth. You often mention that you participate as advisors at certain projects. Would love to know how this cooperation actually works in your case, and with what aspects do you usually help these projects? David, you want to take that?
Yeah, sure. So we're advisors for three main projects, Optimism, ZK Sync, and Mycelium. It's different for every single team. And our main skill, I would say, is just narrative and storytelling and getting the teams to get what they are building into, kind of what I was saying with the scriptwriter, into as few words as possible that are punchy and like can stick inside of people's brains. I think we're really good at memes. And so what Optimism is doing, when Optimism explains what they're doing, they'll take a very technical route that takes a lot of time. And then Ryan and I kind of understand it at a much higher level that I think is more understandable by a broader set of people. And so we'll help them kind of craft and just storytell what they're doing so it's more digestible and more receptive to a wider audience, which helps on a number of fronts. Broad just understanding, but also it attracts more talents, attracts more developers. So I'd say that's one of the main skills that we do. But then also just general connections, advice, just like lessons from the history of crypto that we've been to. Sometimes company A wants to be connected to company B, and we know both of these companies, so that's just super easy for us. But it's also just case by case. So every single team that we advise has their own needs, and Ryan and I are generally skilled at a wide variety of skills, and so we just help them out. Anything you would add to that?
I would not add anything else to that, David, other than I'm also an advisor for Polygon too, just for sake of completeness.
Oh, yeah.
Here's a question. Could a group of ultra-wealthy people, Bezos, Musk, etc., team up and buy a bunch of ETH, stake it, and take over the network? How safe is the Ethereum network from China? If China makes quantum computing work, could they attack Bitcoin? So a lot of questions about
3 questions.
What if
safety, security?
Yeah. What if crypto really gets attacked by either super wealthy people or by nation state level actors? What is Ethereum's defense mechanism for these types of attacks?
Right. Okay, so let's start with the first question. Could a group of ultra-wealthy people, Bezos, Musk, etc., team up and buy a bunch of ETH, stake it, and take over the network? It's really that last part, take over the network, that is doing a lot of work here. What does that mean? Are they buying their ETH, staking it, and they have over 66% of all ETH staked? Well, if they just do that, that's fine. Because they are not doing anything malicious. What I think we're concerned about is if they start doing malicious things. Maybe if they have 66%, they can do crazy stuff. They can mint new Ether. They can censor certain people, certain contracts. They basically can dictate things. Well, that's where we go into a user-activated soft fork. And so this is kind of like the nuclear threat. But if you're telling me that ultra-wealthy people are going to buy 66% of all Ether, not all Ether, but all staked Ether, and then stake it to the network to influence it. This is when the cool thing about proof of stake is you can actually identify these people and their influence over Ethereum. And so you can say, hey, this Ethereum address is doing things that are misaligned with the community. And we are going to, for the first thing we would do is we would probably just kick them out of the validator pool. Say, hey, get out of here, stop staking. And if they come back into the validator pool and start staking again, then we would probably do a user-activated soft fork where we actually social slash their Ether. And this is the nuclear threat. The idea is to never do this, but if somebody or a group of people have such a high amount of Ether, this is kind of our only choice as a community. And this is why it does not matter who owns what percentage of Ether. At the end of the day, there's always the nuclear option of the user-activated soft fork, the social slashing event, to take over any power, which is why Ethereum always is ultimately settled by layer 0, by the people. And so if chads, if super wealthy people are doing things that the community doesn't like, the community always has the final say. And that is because of user-activated soft fork. And I would say that also answers the second question, how safe is Ethereum network from China? And if China makes quantum computing work, could they attack Bitcoin? Generally, the whole threat is that quantum computing is coming. It's going to threaten Bitcoin. It's going to threaten externally owned addresses on Ethereum. Quantum computing is generally a threat to the current state of crypto. And this is why in the Ethereum world, we are going to be pivoting away from these EDSCA signature schemes that are externally owned accounts. We're going to have to create smart contract wallets that don't do these things. We already have the solution for this in Ethereum land. Bitcoin, I don't think, has a solution towards the quantum computing threat. And that's been one of the big concerns behind Bitcoin. And so if China does make a computing network work, could they attack Bitcoin? What they would do is they would be able to break the signature schemes of super old wallets, right? Like wallets that mined Bitcoin in 2009, 2010, 2011. They could break a wallet, basically. They could brute force their way into finding the private keys for wallets. This is also the same threat for Ethereum, but we have a solution for this in Ethereum. Bitcoin would need to do a hard fork to prevent this from happening, and I don't know how I see that happening. Watch the Moon Math episode with Justin Drake, our first ever episode just with Justin Drake, to learn more about this.
I think one other practical measure is like if you have to buy 66% of staked ETH, it's going to cost a lot of money. And it's
going to make the Ether price go up.
It's going to make the Ether price go up. I mean, if you're buying that much ETH, I mean, expect to be buying at the end of that, I don't know, ETH at like $30,000 or more, because it's going to shoot up that high. There's not that much supply in the market to make this kind of a purchase. So you'd have to covertly do it.
That's the cool thing is like, if you want to attack Ethereum, what you have to do is you have to make all current ETH holders extremely wealthy. Yeah. That's like one of the big defense
mechanisms. I think there are way better.
Ether
honestly, if we got into nation state attacks episode, there are way better nation state attacks, in my opinion, like to be much more subversive. That's how they'd actually attack it. Like something like Stuxnet, behind the scenes, get something in the code somehow, start contributing to the project. It'd be like that, not this kind of economic attack.
Also jailing a lot of people.
Maybe. Wait, what is this question? Will Ryan grow a voluminous stash from Movember? I personally believe this might end the bear market. At least we should try.
I think he's onto something.
Unfortunately, David, the mustache is not in the future. It's never been.
No?
Nothing voluminous. It would just be something that is just like, kind of prepubescent, I think, almost in terms of its thickness.
Have you ever tried?
I have. It's not something that anyone really wants to see, to be honest. I just don't have the...
I disagree. I think the Bankless Nation wants to see it.
Well, this is a taste of it. What are you looking at today? You want more of this?
That is like a Gandalf beard, bro.
Yeah, it could be shaved. It could be taken in. David, should we get to some of the takes?
Some takes. You want to read this take from Jake?
Yeah, take from Jake. Contrary to widespread belief, traditional finance is not safe for consumers or investors. Sure, it's dressed up to look that way, but its neat and tidy image is a thin veil for institutionalized discrimination, exclusion, and exploitation. Crypto offers a different approach. Traditional finance is just institutionalized discrimination, exclusion, and exploitation. Because it's been institutionalized, we think it's normal. That is the take from Jake. And crypto is definitely a different approach to this, much more credibly neutral system without that exclusion, exploitation, and discrimination, if we get it right. What are your thoughts on this?
Yeah, I think one of the reasons why crypto gets so much flack is that all of our like mistakes and errors and hacks are out in the open.
Yeah.
Like we don't have the luxury of being a centralized company with like walls around it to hide all of our mistakes.
The backroom deals are harder to like, there's really no backroom on chain.
Exactly. Yeah, which is good.
What's this take? This is a poll that you put up, and this is David tweeting out: who pays for security in Bitcoin? He has three options here: miners, number 1; transactors, number 2; and holders, number 3. And the percentages from this poll came in very interestingly.
So I before we read out the percentages and also the right answer, I want listeners to take a moment and reflect on who they think. There's a correct answer here. Who pays for security in Bitcoin? Where does Bitcoin get its security from? Miners, transactors, or holders?
Do you mean, are you asking 100% of the security, or are you asking for the vast majority of the security? Those are different.
The vast majority.
The vast majority.
There's one answer that really sticks above the rest.
There's an answer David really wants. Well, it's justified.
Miners, transactors, or holders. Okay. Where does Bitcoin get its security from?
Okay. So my gut would be, my default answer to this would be holders, of course. But I'd also probably put an asterisk there around some of these other things. Maybe miners would have an asterisk for me, and I could explain why. But what is the correct answer?
The correct answer is, where does Bitcoin source its energy? Is from holders. From holders.
Source its energy?
And this is
do you mean
not an opinion. This is 100% fact.
Source its energy. Do you mean like it's economic energy? You're talking about it's like it's actual security defense is not energy. I mean, we say that as a shortcut, but its actual security defense is also capital. It's just like pure money, right? To overcome it's an economic security. That's what you mean when you say power.
These are crypto economic systems. They are secured through economics. So people that answered miners. Okay, so the numbers for who answered this poll also stuck out to me. So who pays for security in Bitcoin? 21% of people said miners. 25% said transactors, and 33% said holders. And so while the majority, the biggest one, was the correct answer, holders, it's not. These numbers are way too close. So who pays for security in Bitcoin? Miners do not pay for security. They are the people that you pay for security. They are the people being paid for security. They are profiting off of the people that pay for security. That's why they exist. Why would miners pay for security? It's their business model to supply security that Bitcoin purchases from the miners. So that we can cross that off. And 21% of people said miners, which means 21% got the opposite of the answer, the inverse answer. The other, both transactors and holders are technically correct, because the transaction fee, when you pay a transaction fee for Bitcoin, that goes to the miners. And so that is a transfer from transactors to miners. And 25% of people said transactors, but we'll pull up some stats here in a second. But the real answer, Ryan, is holders, coming in at 33%, which was the biggest answer. But it's between the two, miners and transactors, the more people got this answer wrong than correct. And so what we are looking at here on Coinmetrics are the two sources of money that is being paid towards miners for miners to protect Bitcoin. And we are looking at $19.5 million in daily issuance that got paid to Bitcoin miners that is minted, versus $275,000 of total transaction fees from transactors paid to miners. So that is $19.5 million of new issuance versus $275,000 of fees from transactors.
What's that, like 95% or something?
That is 98.7% of Bitcoin security came from issuance, which is inflation, which means that holders are the people who are being diluted, who are being inflated, are the people that are bearing the costs of Bitcoin security. And so this is why the answer is unequivocally, well, excuse me, not unequivocally, the answer is 98.7% correct that Bitcoin holders are the people that pay, that subsidize for Bitcoin security. Holders pay for security. And the ratio of transaction fees to issuance is 1.3%.
David.
So Bitcoin is 1.3% paid, securities paid for by transactors.
Okay, so a couple things. So one thing to think about is the analogy of kind of the nation state, right? It's like, who pays for the security of America? And the answers are like military or taxpayers, right? Income taxpayers, excise taxpayers. That's kind of the breakdown. And of course, the answer is not the military, because they receive the funds.
Pay for security.
The answer always is, who pays for security for America? It's the taxpayers. The taxpayers are always paying.
It's taxpayers and bondholders.
And bondholders. Anybody who's holding the money is essentially paying an inflation tax. But let me ask you, Dave, why are you so passionate about this technicality here? Like, why does it matter so much?
Right.
Is it just because like there's such a delta in terms of like people don't know what the right answer is, and you're sort of disturbed by that, or you think that a lot more education needs to be done?
This is a lack of education as to how these systems work.
The economics of them.
The economics of it, right. And so like last weekend, I put out some tweets that the Bitcoiners really didn't like. I said like the Bitcoin, BTC, the asset, does not have a relationship with energy. Bitcoin does, but BTC, the asset, does not. And like just some tweets that really go against Bitcoiner narratives. And like I was received tons of like hate from the Bitcoin maxis, which is normal for me. But like even like other people are like, why can't Bitcoin and Ethereum just get along? And like the reason why I feel compelled to do this is because the Bitcoin maximalist narratives are wrong about Bitcoin. They are telling a story about Bitcoin that is not what Bitcoin is. And like Bitcoin is great. It is fantastic. It is truly a marvel to this universe. The narrative that Bitcoin maximalists say about Bitcoin is completely divergent from that. And so when people say like, oh, Bitcoin, Ethereum, why can't we just get along? I would love to get along with people that tell the true story about what Bitcoin is, but the Bitcoin maximalist narratives are not that, are not what's being told. And that is what grinds my gears, Ryan, and why I feel compelled to, again, this is about education, about who pays for security in Bitcoin. It is holders, it is issuance, it is inflation, and that is a truth that we have to swallow as Bitcoiners.
Maximus, you just got clapped back by a dick butt, and I don't know how that feels, but that's what just happened, in case you were wondering. Here's a good take. Included this last minute, really important one, I think, really interesting one from Giancarlo. Elon is pushing Twitter towards crypto. Zuck is pushing Meta towards crypto. Reddit is going all in on crypto. You're seeing these things. Collectively, that's billions of users. It's just hard to overstate how much of the internet is about to change in the next few years. That, my friends, is a bullish tweet, and I think the bull case for crypto. Web 2 is coming on board. Maybe not Apple, but all of these social media platforms know that they have to support a digital property rights system inside of their platforms. And that digital property rights system is crypto. It's Ethereum, it's Bitcoin, it's these types of blockchain networks. Super bullish, man. Anything to add to that?
I'm on board.
You know what? I'm on board too. And I got to ask you what you are excited about. What are you bullish on this week, David?
Ryan, I think you can guess what's coming. I already gave a little bit of a pitch for crypto dick butts, but what I'm bullish on, Ryan, are crypto dick butts. And one of the reasons why is because crypto dick butts first were a meme before. And so this is like the NFT of the meme. The meme has already been around. And so the NFT version of the meme is also going to be around. So that's my first bullish crypto dick butt thing. It's all like dick butts have been a meme, not just on the internet. Like, dick butts were drawn as cave paintings back in like thousands and thousands of years ago. And so the NFT version of like what is it's in crypto dick butts, man, are in our DNA. I swear to God. Yeah. This is right. And so of course the NFT crypto dick butts is also going to be around for a very long time. The other cool thing about crypto dick butts is the lore behind them. Every good community, every good cult needs a lore. And the lore about like how crypto dick butts are just like searching for their long lost home around the planet, and they need to find their home, which is the island of Gooch Island. And so I am bullish, Ryan, on crypto dick butts because I am one.
Wow, that was a heck of a shout out for this community. How many do you own, David?
I own 2 crypto dick butts.
Okay, so here's your challenge.
They are in my disclaimers and disclosures page.
Get me to buy one. What's it going to take to get me bullish on these things? Because right now I am not bullish at all on these things.
Do you want one with or without glasses?
They have
ones
glasses?
with glasses. They have nerd glasses.
Are you serious?
Yeah. Wait, are you in character or out of
no,
character?
I'm me. I'm just me, David. I'm really excited about glasses right now. It's just something about last week just switched me onto the glasses thing.
Yeah, I'll find you.
It's still probably not going to be enough, though. Not going to be enough. Okay. It's just like it's strange, man. I don't know. Like
they all come around.
It's strange. Okay, well, David's into this. That's exciting. Mm-hmm. I'm excited that you're excited. I'm not quite there yet.
I am excited. Ryan, what are you excited about then?
You know what I'm excited about is Bankless Brazil. All right, so David, you and I were on a podcast with Bankless Brazil earlier this week, and this is a community that started from the original Bankless podcast and the newsletter in Brazil. And there's a Portuguese version of Bankless in podcast form and newsletter form. You can see all the details. They have Discord, everything else. They have merch. And we were talking to the Bankless Brazil folks, and it just struck me how global the crypto movement is. And how global the Bankless movement is, right? So they've been experiencing like 20 to 30% monthly growth, not annualized growth, monthly growth in their community. Yeah. And it's because they were saying is Brazil, the people of Brazil are hungry for crypto right now. I mean, we think inflation is bad in the US. It's like, 8% or something? Do you know the Brazilian currency, the real, has lost 90% of its value relative to the dollar? Not relative to CPI. That's relative to the dollar. So you got to stack the dollar on top of 90%.
Right. Inflation
on inflation. It's stacking. And so this community is built kind of from the ground up, public goods funded. They're doing like local community meetups. They're talking about how like the crypto economy has allowed them essentially to shelter some of their wealth and some of their economic opportunities, the ability to log in from the internet from anywhere in Brazil and work for a crypto company, a Web3 company, get paid in stablecoins, get paid in assets like ETH. This is so transformational, I think, and it's not just happening in Brazil. Did you know 8 million people in Turkey are using crypto right now? And so all of this struck me as sometimes we're in the US, we get stuck in kind of the U.S. bubble regulatory. It's our battle against the banks. Right. It's a battle against Wall Street, that sort of thing. You know where I think some of this could come from? The revolution of crypto is emerging countries and emerging markets where they just straight like leapfrog over Wall Street. It's like, we don't need Wall Street. We don't need US, European banks, right? We have Ethereum. We have a bankless money system, and we could build our financial infrastructure on that. So I'm really excited to see where crypto goes and develops in emerging markets. I think sometimes in the US, when we hear about crypto and going bankless, we get complacent about it. It's like, my bank's good enough. Right. Like, it kind of works. It works okay. Right. This is not the case in places in South America and in places like Turkey, where inflation is ravaging you. And then after inflation, it's capital controls. You can't get your money into the banking system. None of this is very digital. And so the need in emerging countries is very strong. And I'm just bullish about the worldwide bankless community. That podcast made me so.
Yeah, the lesson I think I really took away from that podcast with them is that the sense of urgency out of Brazil. And I think that's probably also echoed. There was that report out of Africa not too long ago from the Chainalysis Africa report saying like crypto just has unprecedented levels of adoption in Africa, from payments and just like access to dollars. I think like we definitely have like this U.S. privilege where 8% inflation's bad, and that's causing a lot of just like, bad times, like hard times for a lot of Americans. But it's just different versus the sense of urgency that's coming out of places like Brazil, where bad is an understatement. And the amount of urgency of getting off of the dollar system and getting onto something that can actually not destroy capital along the way for people's lives is much more than we experience here in the United States. And so the idea that crypto adoption, like base principles crypto adoption of going back to our roots of store of value and payments is still huge for most of the world. And we forget about that here in America. While we talk about things like crypto tickets, and then Ryan comes in and saying, well, what about Bankless Brazil? And I'm like, well,
well, we'll let Bankless listeners, Dick Butts have their place too, fun games as well. But yeah, this is all part of a very important mission. And it gave me that worldwide scope. I mean, the Bankless Brazil folks were just like, hey, for people in America, crypto is seen as an investment. For here, it's like a way out. It's like a necessary. Right. It's not an investment. Yes. We need this. Right. It's a tool. It's a life in order to live and survive in our economy, and that just struck me. So
man, you're making BitBoy look really good, man.
It's just a generic crypto influencer, David. There's no. I don't know who BitBoy is. All right, shall we get to
what's a
the meme of the week? I stumbled across this. This was floating around.
Do we need a meme of the week this week? I'm a dick butt. You're a crypto influencer.
Well, let's do this then. It's an AI tweet generator. So This is an AI. It's a tweethunter.io that will generate tweets from any popular Twitter account that you want. So do you want an AI to generate a pop tweet? Let's see what it looks like.
No,
I ran out of trials.
No, I don't.
We can't. But I got the AI earlier to generate a Vitalik tweet. Do you want to read this?
Vitalik.eth kind of says, to anyone who's working on an Ethereum 2.0 project, 1, your goal should be create a protocol that is as safe as possible and maximally open. 2, your hard fork strategy should be no hard forks. That's a good take.
Wait, your hard fork strategy should be no hard forks? That's not something Vitalik would say, David.
Well, okay, so this is an AI that wrote this, so this isn't actually Vitalik, but I'll go ahead and try and interpret this. The goal should be to answer and align with your community in a way that doesn't incentivize
that
hard
works.
Forks. So
and by the way,
incentivize.
Do you know he does the asterisk thing where he puts the bold? It's kind of like
the emphasis. Yeah, emphasis. I also do that too because
the AI caught that. I agree with goal number 1. That makes sense. I could see him saying this, and working on an Ethereum 2.0 project, he doesn't say Ethereum 2.0.
Yeah, right. That doesn't say that.
And then the second one is your hard fork strategy should be no hard forks. No, he would never say that.
Yeah, I don't even know if that makes sense. Anyways, I think we got one more.
This is one that it generated from me.
This one made me laugh so fucking. So this is the Ryan Sean Adams AI, otherwise known as Ryan. The tweet reads: ETH is 50% down, not because ETH is a bad asset. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a bad store of value. Not because ETH is a b
Okay, this is weird because I can see myself writing this. Should I just like?
You just know the AI was going to go on saying not because ETH is a bad store of value as long as the Twitter tweet would allow it.
Should I just like feed this into like my my Twitter? Like just read
these
the
are
API?
your tweets,
These
bro.
are not my tweets. All right.
These are actually your tweets.
I would not. ETH is more than 50% down. Okay. I could see that I would myself saying some of these lines.
You would absolutely structure.
We'll see how it goes. Maybe I'll start using these. Outsource. All right, that's it, man. I think we have a moment of Zen this week. Should you tee that up?
So you're going to hear a moment of Zen right after you also hear Ryan give his regular risks and disclaimers.
Say it, of course, risks and disclaimers. Crypto, all of it is risky. You could lose what you put in, but we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot. It's for the people.
Trying to tell you, this is about money for me. It's me. I'm here fighting for all the money. Devils, douchebag, with these freaking glasses on. This is about money for me. It's me. I'm here fighting for all the money. Fuck, I don't. I'm the one who does. I'm the one who does.
Please don't sue me, big boy, like you sued that other guy. I know I'm no way down, but this is just a paradigm. When you come from Bankless and RSA, my guy, that's when I respond with a hearty remix battle cry.
Ryan, Sean, Adam. I don't know who the F you are. Ryan, Sean, Adam. I don't know who the F you are. Ryan, Sean, Adam. I don't know who the F you are. Ryan, Sean, Adam. I don't know who the F you are. This is about money for me. It's me. I'm here fighting for all the money. Devils, douchebag, with these freaking glasses on. This is about money for me.